All right, good evening, guys. Ken at Tortoise Capital. This is the Strategy Report, Strategy Podcast for September 29th, 2020. Presidential debate number one. Let the games begin. All right, let's take a look at what we got here. So yesterday we saw this support level. Dang it, come on. We saw the support level hold. Had a 2-day run up. It broke just through the skin of the dragon, came very near the PSAR, and we were treating that as a critical state. Would it go here? Would it go there? Would it go sideways? And we mostly got a sideways move. We're still between that the RL30 spine of the dragon and the upper skin of the dragon and the PSAR. So we're in this kind of no man's land. So this feels more like a non-move today, although I must say the downside felt a little stronger today. But again, we thought that today would be a tactical trade, waiting to see what the debate was going to shake out. So I still think that's going to be the case. I'm still expecting a large gap tomorrow, and so if we just treat this as a intermediate price level here, it's still, it's 2 ATRs to the 10-day high. It's 2 ATRs to the, one, two, to the 10-day low and the belly of the RL10. So I think it's all bets off until we see what the debate's going to look like. Still tracking 10-day high, 30-day and 10-day low. Dragon sloping downward. PSAR tomorrow is going to be at 333. That seems like a crucial price level. And then the belly of the dragon at 328. So there's about a $5. There's about a $5 range inside here. I do want to cover a couple trades of interest today. Okay, so this is Twitter on the minute chart, and this was yesterday's close. And notice the minimum manageable risk box here. There was a fractional gap up, and then all it did was just take off. And so when we get a MMRB move off of the PSAR, which is here, we get our entry in the green dot in the usual way with about a 25-cent risk. It moves sharply up. So we've got our Wu Wei exit. And now at this point, it's 1, 2, 3 dots. So we move up the stop to the PSAR, keep that in place until the Bollinger Band mean catches, and then that becomes the managerial trade stop. And then anywhere in this position, if you feel like you need a sniper exit, then we would take half the position with the sniper and half with the manager. The alternative is where you're using a PSAR trail and then pick up the Wu Wei exit. So that would look like this, that you just are following the PSAR dots all the way up. And then at the spot where the Wu Wei exit would leap up, then you just keep that in play till the Bollinger Band mean picks up and continues on. So I'm just thinking of that as the PSAR trail to the Wu Wei exit, and that's characterized by that dotted line. I just noticed that when you do have a sideways quiet channel the previous day and there's no real gap, that RL90 the green line, which is, in between the RL270 and the RL30. That RL90 actually acts like an interesting stop as well. It's a little bit faster than the Bollinger Band mean, but not quite as fast as the PSAR or as fast as the Dragon. So that's kind of an interesting. I've never really looked at it that closely before, but that's really the 30-period regression line on the 3-minute chart too. So that's also on the 10-minute chart. That's the RL10. So that's what price on a 10-minute trader looks like. He thinks that's what that price is. So that may be an interesting stop. This one ended up being a pretty good trade. This one is from Chi Wing Chong, who offered this one. So he was trading. Oops, let me get my arrow. He was trading DIA with a 50-point risk box. And then he saw the Z3 breakdown here and to get his entry. And it was also a supported winter crossing, he noticed. So his questions were, is this scenario tradable because of the Z3 break right here, or the fact that it has become a supported winter crossing, or a combination of both? The answer is it's a combination of both. Both by themselves are reasons to enter. And, excuse me. But taken in combination, they're even more powerful. Next, he notices that the supported spring and the supported winter crossings are more reliable when the price moves outside of the river, or when the MACD line moves out of the river as well, the Red River. Otherwise, it's very choppy when it's inside the rivers. Is that observation valid? It's absolutely valid. In fact, that's the absolute essence of the RLCO framework, is to find the difference between normal chop in the Crocodile River and the abnormal moves, which indicate trending behavior has begun, right? So his observations are absolutely correct. I would just notice now my additional markups, the initial risk up to the PSAR, and then you get 1, 2, almost 3 full risk boxes down to the maximum favorable excursion. His exit is down here like a sniper exit when it crosses the Bollinger Band mean for the manager. And so it only gives back about 3/4 of one of these risk boxes. So it's not very much give back at all. And then the capture is about 2 1/4 risk boxes altogether. So this is absolutely valid, right by the numbers. Well done. Good job. Here's one on U.S. Steel, and the reasons why I absolutely love U.S. Steel. All right, so this one is a series. So this is about 7 cents on the standard minimum manageable risk box. Okay. So you're going to see I'm using that size box here, 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 and here. So they're all using that standard box. So this one is early in the morning. It's at 9:45. So this is like a gap up, and then rolls over. Summer becomes fall, crosses the Bollinger Band mean, crosses the RL270, and it's a MMRB from the top. So this is like getting short inside the pocket, and the actual collapsing dragon would be right about here. Let me mark that with a yellow dot. So this would be the collapsing dragon entry would be like right in here. But because I already had the pocket entry, I get a little price improvement. Now, what I want you to notice is that when this support level breaks, notice how fast and harsh that collapse occurs. And that's why I like the pocket, so I can be in. And then when it collapses, I'm not trying to chase and get filled down here, but I'm moving my stop to no lose plus dinner for two. So this one just works from like 762 all the way, and it runs straight down to 738, which is 24 cents on a 7-cent risk box. So that's about 3 execution hours. Then it gives a consolidation, and I probably could exit it here, but I exit right in the when the winter becomes spring and it crosses the RL10 crosses the dragon. So that's a stop and reverse. So that's about 3 execution hours. And this one is about 2.5 execution hour. That could have been better. But I was hoping that the VWAP would hold. Then it came down to the VWAP, so I exited and then it resumed. So I gave this a try. I hung on too long. I should have been out sooner because this rolled over in exactly the same place this rolled over. And this was basically a scratch. This was a stop and reverse because it's crossing the Bollinger Band mean. And that's the same trade as this one, getting short of the same location. After it failed to follow through, stop and reverse, 1. Add a second one on the collapsing dragon, and then the supported spring crossing and touching the Bollinger Band mean. So that's about 3 more execution hours. This one is a stop and reverse, and there's 2 execution hours, and then exiting on the RLXD in the usual way. So that's about 8 execution hour on U.S. Steel, which trades like a speculative symbol. And we noted before that around 7.25 was its deep fair value. So this is bouncing around at the bottom end of its fair value. So it's kind of a value play that has some possibilities. This one is, that's our daily chart. I'm sorry. Yeah, I got Twitter, got US Steel on that one. Okay. And then the last one was Win. So this is a frog champion, and it's always volatile, always directional. Today was a collapsing dragon with about a 50-cent risk box, and that's about 1 execution hour. I tried this one as a supported spring crossing. It stuck around a little too long. Fractional loss, stop and reverse, scratch, stop and reverse long, made a fraction, got short, made about 2 execution hours. So this one didn't really give me the follow through during the day that I was hoping for. And so I kind of ignored it the rest of the day, although I did notice a nice sideways quiet channel starting to form here. Yeah. And when that channel is the same size as that minimum manageable risk box, then any breakout from there is always interesting and good. Okay. Let's see the sectors. All right. So the S&P was down 0.5 today. Diamonds were down 0.5. The Russell down 0.4. Treasuries were fractionally better at 0.12. The things that were better than the market and for the sectors, tech was only down 0.3, Mexico 0.2, healthcare 0.1, Japan and emerging markets 0.1-ish. The FANGs had a marginal day at 0.13 also. So when the fangs are only as good as the treasuries, it's that kind of day. Wheaton and Clean Energy, 1.5 and 1.7 respectively. Silver was the bigger winner today at 0.2 or 2%, I should say. The symbols that were better: Facebook, Nvidia, Twitter, Google, Salesforce. So 5 out of the top 5 companies were all the big tech leaders today. Then you had Cliff, fractional, and then micro losses here in Walmart, Home Depot. On the weaker side, which was more of a problem today, so you got the S&P down 0.5, materials 0.75, discretionary 0.8, the triple techs -1% today, finance 1.2, commercial real estate and energy 2.75. Oil exploration -3%, oil itself -3.4, and then the losing companies today, the big loser, Nikola, Alcoa, Win, Nucor, U.S. Steel, Devon, Dow Chemical, Boeing. So it's all those industrials and materials companies were the weak sisters today. So tech actually held up fairly well compared to the rest of the other sectors. Okay. Just a quick look at the daily report. Okay, so still bullish normal, still overbought short term, 5% above the sideways. Risk Z continues to micro improve, shows us in a critical state, ready for a big move in either direction, actually. No signals out of channeling and overreaction. Intel, Walmart, and Apple have the minimum sell off from the 10-day high. U.S. Steel, Chevron, American Express, 3M Travelers, Halliburton, Schlumberger in the oil patch, still showing weakness, along with natural gas, Brazil, energy, the energy sector, and oil and energy exploration. So 5 for 5 in the energy complex for Max Pains. Tons of dojis today. I think just waiting to see what the debate will bring. Still a good number of auto framers in play, featuring American Express, Chevron. It's a big percent loser today. Home Depot, I like that one on the long side. No signals per se in the ETFs, just they're all idling with just a handful of dojis. Still a good number of auto framers in play. Brazil is interesting, Latin America. Silver had a good day and is still number 1 in the auto framer. Energy sector took it in the nose today and is at 3-1. Lots in the auto framer to choose from. I think we're going to see a strong directional move after the gap tomorrow. I think there'll be a big gap, and I think it's a strong directional move. I'd be ready for 1 or 2 sharp reversals as they game the system, but I'm expecting a lot of volatility and strong directional moves in the morning. So I'm going to start the day with hybrid frogs. The symbols that today were compressed so much that there's a real nice chance of a big directional breakout. Look no further than Walmart, Treasuries, Tech, Apple, Disney, Salesforce, energy, consumer discretionary real estate. So lots of things ready to pop tomorrow. I think those top three are pretty good. Walmart, Treasuries, and tech. Winter dominating just about everything in the ETFs. Let that come up on your screen, and then the same in the ETFs. Honeywell remains strong in the summer. And then these in the spring would be the ones that are turning the corner faster than their peers. They've already started to hook back up out of the winter and into the spring. So Home Depot, McDonald's really stand out for me there. Multi-time frame NDX, Latin America and Brazil continued their weakness. Oil really got a beating today, but gold and silver responded maybe to the risks of the debate in that three-ring circus. And that's pretty much everything I wanted to cover. I want to get this published and posted and let you get back to the debates. So we will be ready for Hybrid Frog in the morning, ready to go right from the get-go. Okay? Take good care, guys. We will see you in the chat room.